Yo, what's up, everyone? Hope you all are doing well. I just want to go over something that I get a lot of questions on. It is pretty much one of the main ways that I trade. Yes, I trade off of the chart, price action, but something that you may see me talk about all the time. Like literally almost every chart I post, I have a premium chart with it. Premium. Why? It's because you are not trading a chart. Yes, it is, but you're not trading shares. If you were trading shares, then you would just be buying, say, hey, I want to buy right here and expect it to go here, and that's what I'm going to get paid. But unfortunately, that's not what you're doing, or maybe fortunately, since it's a little bit more lucrative, we are trading options. So we have to know how the options move. And one of the things to understand is that sometimes the premium lags. The other thing is that as candles bounce up and down, this space between here and here may only be 20, 30, 40 cents in between the spread of these candles between the wicks to wicks on each side. But that could be a tremendous amount on your premium. And that is how you lead to getting stopped out. Um, yes, this does matter more as you're dealing with zero date to expiration. But even if you're trading 1 DTE, 2 DTE, 3 DTE, it honestly, I feel like you can get messed up no matter what. But, if you don't want to have to worry about that, trade 4, 5, 6 day expiration. It's a little bit less, but let's be real. Like, I know most of you motherfuckers aren't using weekly expirations. We know that you're buying 0 DT, 1 DT, maybe 3 DT. So if you're anything like me and you want to get a good fill, I want to show you guys how, because this is how I secure my best wins. So let's get into it. Um, let's just say you want to let's draw something up real quick. So let's see. I don't really use Webull very often for charts, so bear with me. Let's just say you're looking at this for today's price action. So say you want to enter in here. You're looking to short this thing. We're at 396. A reasonable strike for you would most likely be 395, 394 max. Never, especially on 0 DT, even 1 DT, really don't buy more than 2 strikes out the money. Like, unless you're buying way like long expiration, just don't do it. Um, so let's just look at the 395s. Right here, we're at 1051. Let's see here. So 1051 is right here. So this premium low came in at 56 cents. I like it. I like it a lot. That's actually the range of premium that I like to get. So let's check this out. We hit that, and I'm actually going to change this to a 3 minute so you can kind of get a little more grasp on this. Look at this. This premium has been respecting this from previous days. Right here, right here, right here, right here, right here. You're basically looking at it. It's pretty much kind of a premium low on that. But here's the thing. So Say you miss this. You miss this initial wick. You see it coming down. Here's what most traders do. They see this drop down and they're thinking, oh, it's gonna sell. Click, 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 click. Buy, 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 buy. Well, you might get away with that sometimes, but here's what happens. Say you saw it right here. It fills you up in this area, so now you've just paid 77 cents for this contract. Well, look, at 11 o'clock, 11 o'clock, which this candle is far lower than this candle by, let's see, this is 39, 396.30. This is 24 cents less, but yet the price on the premium is almost the same. Even though these candles were lower, this candle came in lower on the premium, even though it should be higher. It doesn't make any sense, right? Well, if you entered up here at 77 cents, now you're down to about 64 cents. So that might be your stop right there. And then you miss a 230% move because you got stopped out because you weren't patient on your entry. I wish I could ask you if that makes sense. But you have to be patient and you don't have to try to buy right here. You see this? You see how it's respecting right here? And you see how the price is trading in here? Don't just slap the ask or the mid, or don't just buy. Be patient. I swear to you, it will increase your success. It will change your stress level. And the most stressful thing it will just be thinking, oh, well, am I going to get in this position? Is it going to fill me? Oh, God. But look, as soon as it fills your ass, you're going to be green the whole time. It's literally like if you were to put a fill in, I don't know, this thing, there we go. If you were to put a fill in at 62 cents, you would have got filled and you would have been maybe red for 1 cent, like almost nothing. And then you would have capitalized on this bad boy. Let's look at another example. So we see this down here. Let's look at the call. It was 393, almost, yeah. So let's look at the 395 call at 11:20. So here's 11:20. The low of this contract was 44 cents. You would think like, oh, this is the low of it. You would think that it would be way cheaper. But for some reason, these and this weren't that much. Even the ascending candle wasn't that much. So this is actually a pretty volatile move. And this one is a little bit more on the difficult side. So right here, you'd have to act pretty fast. But in most cases, that's not the case. So yes, this was actually your low. But if it came back and pulled away, I mean, it jumped from 44 cents, 44, 45, up to 60 cents. So 16 cents more than what you originally wanted. Let's look at a smaller time frame, see what it's going on there. See, there we go. That paints a little bit better picture on that 1 minute. um, it still came down here and then pulled back. And so if you miss this on this one, and this is a 1 minute candle. So I mean, you had 1 minute to get in and you honestly didn't know if it was going to drop. But the thing is it went from here, and if you just slapped, you might have been okay because the next candle didn't drop down that far. So in this situation, it wouldn't have been the worst thing, but say I wanted to get filled right here, well, I'd be looking at this. I'd be having a order sitting at about 48 cents if I wanted to be a little bit more risky. 52 cents. If I wanted to for sure get filled and I was like, I gotta get in there, I'd do 52 cents. Um, let's look at it a little bit better. Something that you constantly see. Here is accumulation. Actually, I'm sorry, distribution. We got a distribution right here. It's bouncing all around. Once again, it's kind of later in the day, so I like to keep the strike like no more than $1 out. 396. Let's look at those 395 puts again. $395. And let's just say you're looking at from like, I don't know, 12 here. Like I actually took this trade. And it was good. Obviously, this price action wasn't my favorite compared to, the first sell-off, the second sell-off. This one was a little choppy. But anyhow, if you're trying to get into it, like let's look at this thing from 12 to almost 1. We're getting a little freezy right here. Okay, well let's just hopefully this is still recording. But so we're seeing, choppy, kind of rejecting, it's wicking off, it looks like it's gonna sell off. Well, if you are trying to buy every time you see it drop, you're gonna get stopped out because right here it's sitting at, about 40 cents, and then the range is sitting at about 68 cents. So that there's literally a 28-cent spread there. There's no way you're going to be able to hold through that. But say you want to get into this position and you're not sure if it's going to bounce around. Well, you see that it's there. You see the top's there. That's the premium low. Well, if you see that this is where it's hitting every time, you could literally place your order at 45 cents. You might be read a couple of cents at max in your position. Yeah, I mean, you'd literally be read a couple cents. It'd be nothing. 5 cents, you'd still be in that, still be chilling. And when you zoom out, this one actually doesn't have enough price action back in the same area where you can see support. But you guys see what I'm saying? Like, you're trying to see where it's hitting. And instead of just buying on a down candle or buying on a random candle hoping that it's going to go down, you're looking at what is a good price to buy? What is a premium price for me to buy at? Setting your order there, and either it fills or it doesn't. If you want to be a little bit more risk on, you go up to the biggest base and you set your fill there. And you could have got filled right here. You could even got filled right here at 15 or right before 15. Let's see. Oh, that was this. Never mind. Wrong day. So here we are. Sorry, my bad, lagging out on it. But this came down to 40, and it was trading in this range. So 46 cents is where I would have set my order. And the most I would have been down this position was 6 cents. And then look at that, went all the way up to 150. It was a freaking grind, but we got there. So that's just what I'm trying to convey. I hope this helps. If you guys want any more info on or long-winded explanations on this, hit me up. But hopefully this breaks it down. Patience and mindset are everything with trading. And since you're trading, uh, you're not trading the equity, you're trading the derivative. You have to be aware of the derivative, as that is what your trading vehicle is. So don't just slap the ask. Don't jump in that play. You're trading SPY. If you're following me and you're doing your thing with SPY, you have lots of opportunity. You don't need to just jump in that. You can wait and you will get filled and you will have a far less stressful trading experience. Um, Hope this helped you guys. Have any questions? Hit me up. Till next time. Later. You.